Assalamualaikum and hello everyone. Before we begin, I want you to imagine you are the CEO of a company. Imagine that your business is not doing well. However, investors want a higher profit and shareholders expect a good result from your company. Under this pressure, would you change a company financial statement to make a company look better? Of course, most people would say no, but when people are under a lot of pressure, they will make a bad decision. According to EY Global Integrity Report 2024, more than 5,400 employees, managers, senior leaders and board members from around the world were surveyed. The report found that 38% from the 1,400 people, they would do something unethical to improve their career or to earn more money. The report also found something very surprising. Only 25% of employees said they would act unethically. But the number increased to 51% of senior managers and 57% of board members, which is the higher position than employees. This is called a leadership integrity gap. It means the people who should set a good example, which I say a higher position, are more willing to break the rules compared to the lower position, which is a normal employee. Why is this important? Senior manager and board member have the power to change a financial report. Of course, because they are higher position, so they have more power. They can record sales too early, delay recording expenses, overstate assets, hide debt, and even record fake sales. This action makes the company look more profitable than it really is. This is called a financial statement fraud. It means changing a financial statement on purpose to take advantage of the bank, regulator, and the public. The EY report showed that financial statement fraud are often start with unethical decisions by company leaders, which is upper management and board members. This is why honesty, strong corporate governance, and good fraud detection, which is internal control, are so important in protect company and the public.
Alright, thanks Atik. This issue also highly relevant in Malaysia. So several corporate scandals have shown how financial statement manipulation and weak corporate governance can destroy investor confidence and damage a company's reputation. So when financial report cannot be trusted, investors lose confidence. So and employee may lose their job, and lastly, the wider economy can also be affected. So that's why integrity at the leadership level is so important. If unethical behavior starts from the top, it often spreads throughout the entire organization. So employees may feel pressured to remain silent or even participate because they fear losing their jobs. So if senior management is involved, how can fraud be detected? So this is where forensic accountants play a critical role. So unlike traditional auditors, forensic accountants actively investigate suspicious financial activities and search for evidence of fraud. So according to the EY report, two important tools help combat financial statement fraud. First, independent whistleblowing channels. So employees can report suspicious activities anonymously without fear of retaliation. So this allows information to reach independent audit committees instead of being blocked by management. Second, AI and data analytics. So modern forensic accounting use artificial intelligence and data analytics to identify unusual financial patterns. For example, manual journal entries made late at night, backdated accounting records, large round number adjustment, and unusual transaction recorded near financial year end. This red flag often indicate attempts to manipulate financial statements. Technology helps investigators detect patterns that humans might overlook. Ultimately, financial statement fraud doesn't begin with numbers. It begins with decision. When leaders use short-term success over integrity, the consequence can affect employees, investors, customers, and entire economy. That's why forensic accounting is more than just investigating fraud when it happens. It helps prevent fraud, strengthen corporate governance, and protect public trust in financial reporting. So before we end, we'd like to ask you a question. If you discovered that your company financial statement being manipulated by senior management, would you feel confident enough to report it? Share your thoughts in the comment below. Don't forget to like, share and follow to help raise awareness about financial statement fraud and the important role of forensic accounting.
Makes it hard.